Hello everyone, this is Andy Wong. In the past week, there have been huge fluctuations in the financial market, especially the foreign exchange market. For example, the US dollar fell sharply, while the euro and pound sterling rose sharply. Is there any chance that the Australian dollar can catch up? And in this episode, I will tell you what happened in the macro context, and what factors should I pay attention to in AUD in the future. What if you are interested in knowing the content? Welcome to continue watching our teaching content in this episode. As in the past, there is no investment advice in it, but it is recommended that you remember to subscribe to our YouTube channel, like our video, and introduce it to your friends. Of course, you can make an appointment to have coffee with me, or if you have any other questions. Well, let's take a look first. In fact, the US dollar has fallen sharply in the past period. Just this week, causing it to fall from a level close to 108 to as low as 104. If we use the previous measurement from the high in January, it has actually dropped by 5.8%. Here, let me first talk to you about a pattern called a head and shoulders top. That is, I drew this red line, which is called the neckline, everyone. It's important to recognize each of these patterns first, because for those of you who don't know much about technical analysis, you need to understand what does it mean when there are some signals that are stronger or more credible. Because you may have listened to some media programs and heard something called head and shoulders top and head and shoulders bottom. These are called technical forms, which means that it is like the head and shoulders top on the left side of this picture. This is what we will see. The price of the product has created a shape like a mountain. We will commonly call it the left shoulder and the right shoulder, and there is a low position at 2 o'clock in the middle. We will draw a red line, which is called the neckline, usually so. Once the price forms a head and shoulders pattern and breaks below the neckline, we see it as a sell signal. We know that the head and shoulders pattern is a reversal pattern. Of course, it isn't guaranteed, but the head and shoulders and inverse head and shoulders patterns are more likely. Now, about the inverse head and shoulders pattern, a bottoming pattern. It's the mountain shape upside down. Here, the two high points between shoulders form the neckline. So, for the inverse head and shoulders pattern, when the price breaks above the neckline after forming the bottom, we see it as a buy signal for this pattern. The chance situation is like this, so the credibility is actually relatively high. Now, flipping the script, after discussing the head and shoulders pattern, which indicates a peak and a drop, let's talk about the inverse head and shoulders pattern, which represents a bottoming and rising pattern. It's essentially the mountain shape turned upside down. In this case, the two high points between the left shoulder and the right shoulder become the neckline. So, for the inverse head and shoulders pattern, when the price breaks above the neckline after forming the bottom, we see it as a buy signal for this reversal pattern. That's it. Here are some technical analysis teachings to share with you today. Now that you understand what the head and shoulders and inverse head and shoulders patterns are, let's flip the script and take a look at the euro. You might have heard that the economy hasn't been doing too well lately, and with the central bank needing to cut rates, you'd expect a different outcome. But surprisingly, the euro has actually surged from 1.04 to nearly 1.08 over the past week. It has risen by nearly 7% from the low. Well, we can see a green dotted line here, which is like a neckline. There is a head and shoulders bottom here. So this degree has also become a form called a reverse. The British pound has a similar situation, and it has made a similar head and shoulders bottom situation. After breaking through the neckline, it made a sharp rise, overall increasing by 6.8% from its low point. So we see the US dollar falling, while some non-USD currencies like the euro and the pound are rising. Is this an opportunity for the Australian dollar to catch up? However, we notice that the Australian dollar seems to have a different pattern right now, because we have seen the Australian dollar. During this period of time, it is actually nothing. Like Australia, that is the euro, the pound, and the pound have risen sharply. Instead, they are still lingering. The trend of the Australian dollar that we have shared with you in the past 2 months is a situation called a trumpet-shaped bottom. We have not yet seen a form. That is easy to establish a turn, but At least we still maintain our previous view, and the market is in a stable situation with a chance to establish a firm bottom. What exactly explains the recent strong rise of the euro and the pound is that we will actually see that, for example, the ECB, which is the European Central Bank, has actually recently made a move to cut interest rates. In fact, the cumulative interest rate reduction has been close to 1.85%, but it is too late. So where is that? What is actually mentioned in the conversation is words. The ECB has indicated that interest rate cuts might be nearing their end, which is a relatively hawkish statement. This leads the market to think that the euro could become a more attractive option, especially since the US dollar might face rate cuts, while Europe may not reduce rates further. This situation is beneficial for the prices of some euro-denominated assets. Well, what's more, I think what the media rarely talk about recently is that after so many years of emergence in Germany, is it the most stable position in the Eurozone? Regarding financial debt, it is actually the most conservative place. But that's right, and the family has made a reform. Let's talk about it. There is no upper limit. The main reason for doing this is because they have to face the possible situation between Russia and Ukraine. They will increase this defense, which is a requirement for national defense. In addition, they will also provide such huge support for a number of projects of 500 billion euros in the next 10 years, whether in infrastructure or investment, which makes the market suddenly feel so tired. In the European economy, especially with Germany as the leader, there is a chance that these policies will lead to economic growth in the next few years. For example, GDP will increase by perhaps a percentage, or even by a percentage. From a long-term perspective, it will rise by 2%, which is what is added to it, which accelerates their growth rate bottoming out and picking up. And these are the short-term gains in the euro, and that's it. One of the reasons why the pound is remarkably strong, well, of course there is certainly a third reason, which is Donald Trump's attitude towards the disaster and the situation in Russia and Ukraine, which makes everyone feel that Europe wants to unite, and Donald Trump talks a lot about tariffs, so Europe needs to be more united. So here it is. With so many uncertainties surrounding Donald Trump, the market has been selling off the US dollar and moving into what is seen as a short-term safe haven, which includes the euro and the pound. I'm not going to comment too much on this because I think the euro and the pound might just be experiencing a short-term rebound. In the medium term, there are still many structural issues to address. It's almost like if you think of it as a big chess game, this arrangement might actually add some hidden concerns for the Eurozone in the medium term. But for now, I won't go into too much detail about Europe. At least we know why the euro and the pound have risen so much. So, it might sound like there's not much connection to the Australian dollar, and honestly, there really isn't much of a link. The question is whether there are any factors that could help the Australian dollar catch up. It seems like it doesn't have much to do with Europe's own issues. One thing we need to look at is the relationship between China and the US. Will the tariffs become less stringent? Will they be a bit more moderate? Additionally, it's really important to note that China's recent two sessions have announced that they aim to maintain economic growth around 5% to stimulate domestic demand. Given that the Chinese economy has been slowing down for several years, will we see a bottoming out and recovery? Because if US-China relations improve and the Chinese economy starts to rebound, it could potentially lead to, if the prices of commodities like copper and iron ore have a chance to rebound, it would actually provide significant support for the Australian dollar. One more point. Whether the Reserve Bank of Australia RBA will accelerate the rate of interest rate cuts may have an impact because everyone may feel that the pace of interest rate cuts in the US dollar and the United States and Australia may be similar, and there may not be a big difference in interest rates, that is, unless the LBA suddenly cuts interest rates very quickly. there is a chance that the Australian dollar will move faster than expected, but there will be some drag on it. However, the reverse direction is still the same as the original US dollar. Even if the United States is cutting interest rates and reducing the RBA more, Australia is still cutting interest rates, which is relatively slow. There is a chance that there will be some support for the Australian dollar. Okay, and the third point I also think is the biggest factor here, because there is always the Australian dollar. And there are many companies with different iron or assets in Australia. In fact, what we have to face is that there are more global economic factors than we have to face, and that is China's factors. So now everyone will feel that the global economy seems to be relatively weak. Yes, that means yes. This time, it's about to go backwards, but it seems to be holding on to the side of a car, and there is still a slight growth underneath, right? In fact, the leading United States will become a very important factor, but recently, there is a theme in the United States. There is a theme that talks about grow fear because you can see a data called GDP now, which is relatively high and sensitive. In relation to this, when we look at the forward-looking data, we see this green line. After the end of February, it suddenly dropped from over 2% to between -2 and -3%. Now, of course, this doesn't mean that the US GDP will definitely show negative growth in the first quarter, but it does indicate a significant chance that we might see a contraction for the first time since the first quarter of 2022. In this scenario, if the US economy only experiences a quarter of contraction like in 2022 and then rebounds, people might not be too worried. But if the US economy actually heads towards a real recession, whether it's a technical recession with 2 consecutive quarters of negative growth, could slow down or drag down the global economic pace. As a result, there is a chance that the prices of some commodities will fall and the demand will decrease. There is a chance that the Australian dollar will be affected, but there is a chance that it will be dragged down. So let's talk about the 3 factors first. What if there is a chance to change the time when the reversal occurs? So, there's a good chance that the Australian dollar could become a factor that catches up. Alright, in this episode, even though we've talked a lot about the foreign exchange market, everyone knows that the stock market assets are also related, especially as we approach the end of the year. I've mentioned before that the financial sector in Australia is relatively expensive. This has led to concerns about growth, valuation, and the impact of interest rate cuts, which are affecting some of the major financial sectors. ASX 200 performance has been dragged by commodities, falling below a rising trend line in place for a year. What impact will this have? Want more on the Australian stock market? Comment below. Thanks for your support. I'm happy some shared their experiences on exchanging a driver's license in Australia. Hope to discuss investing or life in Australia. Let me know. Thanks for your support and sharing. PM, I can listen to what I said, so I will try to follow up with you in some different ways. Well, here I am. Thank you all for your continued support, and I am very happy. Last time when I talked about renewing a driving license in Australia, there were some viewers who would share some of their own experiences in the comments. Okay, so I hope that in Australia, whether it is about investment or some life topics, if you want to know more, you can tell me. I even thank you for your continued support and sharing. I hope we can have more opportunities to learn together in this area of knowledge. So, that's it for today's sharing. Thanks a lot, everyone.
Hey everyone, I'm Andy Wong. I'm one of the few people here in Australia and Hong Kong who is licensed or qualified to help local clients and companies with diversified investments, like my years of experience with US stocks, Australian stocks, SMSFs, ETFs, and so on. I hope to share my investment and life experiences with the Chinese community in Australia and Hong Kong through this YouTube channel. If you're interested in having a one-on-one chat with me, you can book a time through the link below the video or in the channel's content. Schedule a time with me. Thanks for your support. Remember to leave a comment, give a thumbs up, and share. Our teaching share doesn't include any investment advice. So, Before you make any decisions, remember to consult the relevant licensed professionals for advice. Thanks a lot.